Today is Thursday, November 9th, and happy Chapter 11 Confirmation Day. The plan has finally been confirmed, and Celsius may be dead, but long live Fahrenheit. And while far from right, at least we can now put this chapter behind us. And of interest in this confirmation were some valuations performed by Stout Rhesus Ross. So they looked at various assets that the estate held as of May 31st of this year. And they concluded it held $2.8 billion in liquid crypto assets, $196 million in institutional loans. They valued alternative investments at $154 million, and then $410 million at the low end for mining, up into about $700 million at the high end, with a midpoint of $565 million. Notwithstanding that mining, as Keith Chazan found, lost $200 million throughout this bankruptcy process. At least there seems to be a nice valuation they're putting on it, and let's hope that the market agrees with that. So that totals $3.7 billion in assets. And considering that they owe over $6 billion in obligations to us, their customers, we're not close to being made whole, notwithstanding Thomas Brazil tweeting about how somehow we're going to be made whole according to the petition date filings. The people of foremost importance throughout this process are the primary account holders who were victims, not the people that bought their claims out at pennies on the dollar. One other thing to keep in mind when comparing liabilities to assets is that the estate has wiped out almost $1 billion of capital from their equity investors. So this isn't factoring into the calculations. They lost a lot of money. When it comes to valuation, Richard Phillips had performed his own valuation analysis that was attempting to rebut the wind-down analysis that the debtors had put forward. And he cited that to convert us into an orderly wind-down. Now, while his calculations do seem reasonable, and he addressed a likely gaming of the numbers by the debtors, they're effectively trying to make the wind-down look as least attractive as possible, largely because they're financially incentivized to complete the reorganization process and not go to a wind-down. But notwithstanding that, it was not persuasive to the court, which deemed him effectively not an expert, despite the fact that he does have apparent expertise. They stuck with the professionals hired by the debtors and deemed their liquidation analysis as fair and reasonable. Now, really, from my perspective, the main reason not to switch to an early wind down is because the BRICS plan wasn't particularly fleshed out. Even though we're paying out of pocket for this BRICS team to stand at the ready, the plan is kind of mothballed, and I don't have confidence that they'd be able to execute it in any kind of quick order. For the record, though, I've always been in the camp that an orderly wind down on day one made the most sense. Celsius is a fundamentally fraudulent company. It does not deserve to exist in this life or the next. It should have been wound down, but that path was not chosen because the UCC wanted to get value out of the illiquid mining investment. And that mining investment is the only reason that the Chapter 11 reorganization plan is being pursued. There would be no path forward if not for that. So effectively, the fraud was so bad, investing in this asset that he had no business investing customer money in, that now our hands are tied and we're going to be doing the reorganization. Now, it won't stop certain members of the press from pretending like Celsius has a new lease on life. But no, you and I both know that Celsius is well and truly dead, and this new entity is in spite of everything that Celsius did, not because they somehow did things better than a BlockFi or a Voyager. They did things much worse. Elsewhere in the document, it mentions that the debtors did not meet their mining performance goals. Surprise, surprise. They had only 86,000 mining rigs online and hashing as of August 31st. They fell below their stated goal of 95,000 rigs by the end of September. They're citing the market conditions, and that might be fair enough. But let's not kid ourselves. We have some old miners, and we're hoping for Asher Ganut to work some magic and squeeze some profits out of this in NewCo. At least those of us that are holding on to our shares. The Employee Incentive Program, or EIP, was approved in this plan. So now we have the undeserving people who might otherwise be considered accomplices of crime now being richly rewarded with $2.6 million for failing to protect us, their customers, from many hundreds of millions of dollars in losses. While the debtor says that these are completely different management from the people that committed the fraud, they were all around when that fraud was committed, and they didn't really lift a finger to stop it. But that's just one of the indignities that we're being asked to endure as part of this process. If we had pursued a day one orderly wind down, these employees would likely be unemployed instead of receiving fat bonuses. But the good news is the Litigation Trust can and should still go after these insiders for any illicit sell token profits. And also, any employee who's charged with the crime will lose their protections as a released party. So any prosecutors out there, if you see something, maybe do something about it. Also of note, on page 16, the plan makes explicit that Bank to the Future and Simon Dixon are not released parties. So somebody should tell that creepy Star Trek guy who's obsessed with Simon, because this will just make his day. There were late objections to the plan from two Cell whales, Dima and Otis. And these two people have pretty different profiles. So Dima was harmed by not being able to withdraw his Cell token, which then entered into pure custody when the program was created on April 15th. And he tried to withdraw, but was unable to. And that caused all sorts of problems for him, which he decided to address a year after this all happened. So Dima filed a motion to convert us to a Chapter 7, which was predictably denied for a variety of reasons. He was late to file. He already had opted into the custody settlement, which made him ineligible now to object. And it meant that he had automatically accepted the plan. So all the claims that his ballot was somehow improperly converted to a yes vote lacked merit because he automatically had to accept the plan. And furthermore, the language entitling custody holders to cash dispersals in the event they were not able to withdraw said they were entitled to petition date values, which he was interpreting to mean 81 cents, but that doesn't necessarily imply the price that the asset was trading at. Cell was deemed to have a 25-cent value on July 13th of 2022 through the settlement, which was confirmed by the court as reasonable, considering that Cell was a useless utility token for a dead, fraudulent platform that would not reopen. And that's an opinion that was actually stated by one Otis Davis, so he effectively wrecked himself through his own tweets. Otis persisted with another filing looking to examine Judge Glenn's law clerk who joined his bench from White & Case. He also wanted to examine Greg Pesce of White & Case, and he wanted to remove White & Case and or Judge Glenn for his crazy reasoning. Now, this is something that the judge already instructed him to abandon, as it was frivolous and completely without merit. Not to be deterred by reason, Otis filed another motion just yesterday, saying, I quote, "I believe that on appeal, the appellate court will not view this as frivolous in any way, shape, or form, and I found it astounding that Your Honor would call my motion frivolous." Now, Otis is someone so blind to reason that he still doesn't even understand that fraud took place at Celsius. Fraud that made him very rich. Otis goes on to say that he believes he's been denied his rights and been bullied by the court, in addition to being singled out and demeaned because he's Jamaican. But no, Otis, you're not being singled out because you're Jamaican. You're being singled out because of your rather astounding levels of idiocy. You made millions of dollars from Cell token while other people lost many hundreds of thousands of dollars, including your friend Dima. Most customers got wrecked by Cell, but Otis got rich because of Cell. And now he's trying to lock in his gains above this 25-cent level, which is already, for him, very generous. The value of Cell at 25 cents was upheld, with Otis's past arguments coming back to haunt him, because he'd acknowledged publicly that the Cell token was, in his own opinion, worthless. And he put forward the expert report of chicken salesman Hussein Faraj, who was lampooned as not being credible, with his numerous mistakes and the fact that he didn't even write the report himself, not to mention that he took longer to read his own report than it took him to write it. Now, it's understandable why Otis would have gotten a chicken expert to testify to the value of his chicken shit token, but it did not hold up to scrutiny by the court and was given effectively no weight. Finally, creditor Johann Brange had his collateral ruled property of the estate, which was, of course, no surprise to anybody. This was going to happen because the battle had been fought many months ago, and if he was a part of the mediation process, he would have realized this was a losing battle. But fortunately, this is not going to affect other loans holders. They're not going to be penalized by this pro se creditor's action because David Adler, on behalf of the loans ad hoc, was able to negotiate with the court to limit its ruling to only dissenting borrowers. For borrowers that consented to the plan, there was no need to rule on the ownership of their collateral. And this now enables them to keep their loan intact for tax purposes, to avoid the disposal event that would occur if the title was recognized as belonging to the debtor. Now, this is not tax advice, but the whole idea of taking a loan out was to avoid the tax events that would occur if the collateral was taken away. So congratulations to the ad hoc group of borrowers for avoiding the cataclysm of these tax events. We now await the plan effective date, which should happen sometime later this month. Until then, thanks for listening, and happy Plan Confirmation Day.